Good morning, traders and investors. Steve Gans here. And I want to take a look at our markets, do the weekend update market analysis. It is Sunday, January 19th. And just to take a quick look at what happened over this last week, as you recall, last Sunday we were down in this area. Let's see if I can get my pen working here. Last weekend we were down in this area here, and I was talking about whether or not we were going to just blow out of the bottom. But my suspicion was that because we had this support here and we were at the bottom of this overall channel, my expectation was that we were likely going to get some form of a bounce. And that is what happened. Now we bounced up, and you see in my channel here, there's this dashed line. That's a 50% retracement. So my expectation in most cases is, you know, around a 50% retracement, you're going to start to get a little pause in the market. You can see we got that here, and then we gapped up, and then we came back down and we paused at that 50%. So 50% many times can kind of be a little bit of a resistance or a support area. But the fact that we're here at 50% and we are at prior resistance makes me think that we're more likely than not to either chop sideways or roll over a little bit. Now, I could be totally wrong. We could break through and we could end up back in the upper half of this channel. I'm just not thinking that's going to happen right now. I would give that about maybe a 30% chance that we would get up to that level. I also think there's probably about a 30% chance of chopping sideways here, and probably about a 40% chance that we're going to drop back down. Then the big question is going to be, are we going to drop out of this channel or not? Will we stay up in that channel? So obviously my hope and expectation, particularly for long-term portfolio, is that we do, in fact, continue to stay into this general channel on SPX. Now that we've taken a quick look at SPX, let's come in and we will look at the VIX, the volatility index for the S&P 500. See what that looks like. And that's looking pretty good. As you can see, VIX has dropped back off here. We're not quite to the lows of 12, 13, etc., but I wouldn't expect to be really with the inauguration here this next week. And of course, we're going into earnings season, which is going to have a pretty big impact on what that trend in the SPX ends up being. Are earnings going to be good? That will certainly help fuel a further increase, or are earnings going to start kind of topping out, maybe even fall off a little bit? Those are going to be some things that we're going to have to closely. But for right now, volatility is relatively low, which helps us think that we're more likely to either chop sideways or go higher. There's not lots of people buying insurance right now on their portfolios, which is essentially what spikes the VIX up. So let's take a look at the Russell, and we can see similar story here in the Russell. Now with the Russell, we did break out of the bottom of this channel, but that's happened a few other times here where we blow out the bottom. This one is a little more out the bottom than the other ones, and it has retraced also to a prior resistance area that's been drawn. So for the Russell right now, I'm thinking that it's more likely to roll over and probably come back out of this overall channel. Now, we're going to have to watch really closely to see whether or not it blows down through this prior level. That would certainly be problematic if it did do that. I don't expect it to at this point based on what I'm seeing in the market, but it's certainly a possibility, and that's something that we have to remain aware of, remain cognizant of as we're evaluating the overall market. So let's take a look at the RUT volatility, which is RVX. We can see right here the Russell Volatility Index, and that volatility is also quite low. Again, overall, that's a pretty good sign that tells us that there's not a lot of people right now that are buying insurance on their Russell-related positions. So that also kind of lends to the fact that we're less likely to be looking at a big drop right now. So that's kind of what we're looking at in the main market indexes. Of course, earnings is going to be a big factor in this overall situation. Right now, I remain kind of more a little bit to the neutral bullish side than I am the bearish side, but that's kind of what the charts are telling me at this point. So thanks for tuning in for the weekend market update. Now, those of you that are part of the alert service, let's take a look at our various positions that we're currently holding in the alert service. So if I come take a look, let's see if I can move this out of the way here a little bit. So if I come take a look at our current open positions, we've got a couple butterflies open. Again, as you know, I love the butterflies. Both of these have decent profit. And the thing to really note is, I mean, our markets have had some really big swings in the past couple weeks, down 200, 300 points, up 100, 200, 300 points over the period of a couple of weeks. These butterflies, the P&L just slowly builds in them. So long as we stay in a general range of our tent, that's what I like about these. I don't have to be glued to my screen. I don't have to be sitting there monitoring, oh my gosh, am I up a big amount, down a big amount? So long as the market just sort of chops back and forth, even if it's big chops on given days, the butterflies aren't impacted very much. Again, that's what I like. I like to get these things to, 10%, 15% profit and get out. You'll notice here we're already at 17%. Now I'm perfectly fine taking this one maybe a little bit further. If I get a really good entry on some of these, which both of these had good entries, a good entry happens usually when volatility is a little bit higher and we can see certain things happening in the market. That's a great time to enter these because usually I can enter them with no upside risk. That means if the market goes up 100, 200, 500 points, it doesn't matter. I'll still have even just a small level of profit up there. So I'm only carrying risk when that happens. I'm only carrying some risk on one side of these trades. And since we're in a bullish mode, I'm okay carrying my risk on the downside of these trades. Now, of course, if our market shifts and we go into a bearish mode and we're trending down, making lower highs, lower lows, I have to rethink that at that point. But for right now, I like putting these on in a bullish configuration, a broken wing butterfly bullish configuration, where I have little to no risk to the upside. So right now, I'm just going to look for time to decay. Going to have these things mound up a little bit. Now, you'll know that in the service on this butterfly, I actually put in a call spread, a small call spread. So I did add a little bit of upside risk to this specific one if the market gets up here above that 6,100 or 6,130, I think is where that's at, range. As you know, in looking at the my analysis, I don't see us getting up there in the near future, which is why I was okay selling that call spread and adding in a little risk up there. I may end up doing the same thing here. We'll see. I'll watch that. When I do that, when I can add that in, that raises my profitability zone throughout the middle of that trade. So I like that a lot. That's when I have a pretty strong conviction that we're not going to blast to new highs, that's a good potential adjustment for these trades to bring in some additional premium and allow me to get a juicier return out of them, maybe 25, 30, even 40% in some rare cases. So that's why I like the butterflies. Then we've got our FTNT, which is the wheel strategy. I rolled this put again. I believe that's maybe the 8th or 9th time. By the time this decays in another 6 weeks or so, this thing is going to be up around the $3,700, $3,800 in profit. And I've never taken a share of stock. I thought I might be getting assigned those shares here this month because during those sell-off days, we were a little bit below my strike price, which is a possibility of getting assigned. But we had that bounce and we got back above 92.5, which is where I had sold those puts. So that wasn't going to happen. SQ here, for whatever reason, I'm not pulling the data on SQ. It's not finding that. Now it is Sunday, our markets are closed. Usually what happens is, that can happen over the weekend just because of that's how brokers' data feeds go, particularly if they're updating and doing things like that. This particular trade is up slightly. This is a long call, a leap. It had been up very nicely, then SQ pulled back. It's starting to rally back up again. So this trade is actually up a little bit, but not as much as it once was. It was up about $400-$500 early on. It's faded back to where I think it was up about $100 or so when I looked at it on Friday. So those are the current 4 positions I have open. I'm going to be considering opening a 5th one this next week, depending on what our market does. I'm considering 2 potential trades right now. One of them, if I think that we're going to get to that point in SPX, if I think we're going to stay stalled or back up a little bit, I may very well do a flat fly. So I didn't draw that real well. A flat fly. And in that particular situation, that is a slightly bearish trade where I'm looking for the market to pull back, and that will create profit in the trade. So that's one possibility that I'm going to be looking at. I may also consider an earnings trade along the way here. I don't do those as much because when I did do those last year, they can require a fair amount of management the day after earnings are announced, or if it's a morning earnings announcement, the next opening after earnings are announced, whenever that happens. Those trades can require some quick and fast management, and that's not really the style that we do here. I like trades that are longer in duration, that none of us have to be glued to a screen to look at and adjust in a quick manner. The other challenge with them is sometimes I go in and I make an adjustment, and by the time I share that adjustment and what I did, that particular opportunity or price is no longer available, just because right after earnings, price can move very, very fast. So those are a couple of the challenges sometimes with earnings trades. If I do an earnings trade, I will give those caveats up front so that people are aware of those. So that's it for our weekend update and our look at our positions here on January 19th, 2025. Take care, everyone.